Well, the more profitable areas are where they're growing. So let's take, they're known for selling physical objects. So, but their own first-party sales of e-commerce, their own product was only up 10%. The big growth was in third-party sales. They make a lot of money, which is more than double that, up 20%. Then they also grew in areas where they get service revenue. So, of course, the cloud computing grew dramatically, just in line with estimates, by over 40%, as expected. The subscription services also grew 40%. That's Amazon Prime, music, other very high margin products that they sell as well. And even though you're hearing the advertising may not be that good, keep in mind this is the first quarter, so advertising is not so hot in the first quarter compared to the holiday season, and it was still up 34%, and it is 100% margin. Now, something that didn't look good. All right, the physical store is only up 1%. If you think the Whole Foods acquisition is working, then they're drinking something out of the spin gun. The whole thing where they lowered prices. No retailer lowers prices
for the third time. They lowered
just to be a good guy. They're trying to generate sales, and they're not succeeding in doing that at a physical store. Physical stores are tough, and they're learning that as they go forward. The other thing that was weak here was international, up only 9%. So you see great slowing in the trajectory of that business.
Liz, so clearly the profitability very strong on the top line, which a lot of people focus on given the multiple. Was it a little disappointing?
I think the guidance was a little disappointing for the second quarter. The second quarter profitability is not quite as strong as this growth that we've seen in the first quarter. But the first quarter, from a profitability standpoint, was obviously fantastic. And as Jerry said, those fast-growing, high-margin businesses are very, very important. I think it's interesting in the context of everyone thinking that Amazon is dominating the retail business, that they can't seem to figure out
stores?
Stores. These little things called stores that still represent the majority of...
It's hard work.
Yeah, it is hard work. So, but I thought the numbers for the quarter were quite strong overall.
Tom Forte, you've got a buy rating on the stock. It's up about 1% after hours. There's obviously a lot to unpack here. What do you think investors are most focused on?
Sure. So I guess I'm a lot more optimistic than the other two panelists. So if you look at the earnings per share beat and the source of the beat, they talked about how you had 53% of units sold were third party. That is a heck of a lot more profitable than first party sales on Amazon. And you had yet another quarter with north of 40% growth for AWS. So I acknowledge that you're starting to see slower growth in advertising as the base gets bigger, but Amazon's still very early in advancing their advertising efforts. Also for Whole Foods, I think that the importance of Whole Foods for Amazon is advancing their efforts in the grocery category. So I don't think that business has to grow at double digits for it to be successful for Amazon. But yes, I think the profitability is very good, especially from third-party unit sales and cloud computing.
Mike, Tom obviously has a buy on the stock. 100% of analysts right now have a buy on the stock. How often do we actually get to 100%?
For a mega cap stock, it's pretty rare, honestly. I do think that the performance of the stock and the ability of the market over many years to kind of look through short-term, quarter-to-quarter noise, I think has kind of got everybody on board.
So Cramer's warning on
potentially a contrarian.
Facebook, Liz, don't trade it until we hear the conference call.
On Amazon.
On Amazon.
Yes.
So what's going to be important on the call?
Yeah, I think it's all the things we've been talking about. They're growing the high-margin businesses. They are growing third-party, and they talked about that in the shareholder letter and said this is really important. But I think also Amazon is trying to reposition itself as a little bit of a good guy in the world of tech. If you read this release, it's kind of like look at all the wonderful things we're doing for people and for it seems as though they are...
Higher minimum wage, is that the sort of stuff you mean?
Yeah, higher minimum wage, lower prices, and all of these scholarships. It's just a thing of carbon emissions. They kind of put a target out there. So I think that they are trying to position themselves in the retail ecosystem as kind of a good guy and not necessarily this bad guy that everyone needs to fear.